Hey everybody, this is another episode of Mastering Financial Exams. I'm Alex Merced, instructor here for Greco Financial Trading for another exciting topic. So today we're going to continue on the topic of equities, and we're going to be talking about warrants and rights. Now, warrants and rights are equity-related securities. So they're not actual stock in a company. So if I have a right or a warrant, I don't actually own a piece of the company. I don't have voting power. But what rights and warrants do is they give me the ability to use them to buy shares in the company. There is some very particular differences about the two. So first let's talk about warrants. Now warrants are usually created as sort of a sweetener. Think of like the toy in a Cracker Jacks box. Why do you buy the Cracker Jacks box? For the toy inside. And that's generally what they do when they issue stock or bonds. They may issue warrants that you get for free with the purchase of the stock or bond to sweeten the deal. Now, what the warrant does is usually lets you buy the stock at a set price, which is usually out of the money, meaning it's much higher than the current price of the stock. But since it lets you do it for, let's say, 2-3 years, maybe 2-3 years down the road, the stock price will be much higher, and the warrant actually lets you buy it at a very attractive price. So, for example, let's say XYZ is currently trading for $20, and I have a warrant that lets me buy it for $50. Not really useful at the moment, but let's say 2 years down the road, XYZ is at $80. My warrant that lets me buy it at $50 is now super useful. I can use the warrant, buy the shares at $50, then sell them in the market at $80. So that's what warrants do. Now here's the thing. Warrants are what's called dilutive, because when you use a warrant, those shares are coming from the company. These are shares that did not exist before. So you're increasing the number of shares that exist, which means everybody now has a smaller percentage of the pie. So anytime you create new shares, it can be dilutive to those who already have shares, meaning their percentage of the company is shrinking, which is generally not really cool. Rights are a little bit different. Rights are given, the company's going to issue more shares anyways. But to be fair and non-dilutive to their existing shareholders, what they do is they give their existing shareholders a first opportunity to buy the new shares. So each shareholder will get one right for every share that they already own. And with those rights, they can buy new shares. How many shares? And enough that after the new shares are issued, they would still be at the same percentage of the company that they owned before. So it allows them to maintain their existing percentage of ownership. It prevents them from being dilutive. And if they don't use the rights, then those shares that they chose not to buy would then go to some investment bank who's called a standby underwriter, who will then sell them to other people, because the company needs to sell those shares either way. But rights are generally much more shorter term, like 30, 60 days. Basically, you have 30, 60 days to decide if you want to use them. If not, we sell the shares to somebody else. But either way, they're a security that you could go out there and sell. You can take your warrant, sell it to another investor. You can take your right, sell it to another investor. And they allow you to buy more shares of the company at a set price. This is why we consider them equity related, because they let you buy more shares. So that's the difference between rights and warrants. Hopefully you guys enjoy that explanation. Feel free to listen to it again and listen to the other episodes of this show. If you want to learn more, purchase a full course over there at greco.com. And also make sure to check out greco.com and see all the different courses. And there's also other videos we've added in the past over there on youtube.com. It's youtube.com/Greco Financial. Make sure to follow us on Twitter, twitter.com/Greco Community. And make sure to follow us on Facebook, facebook.com/Greco Financial, because we'll be doing the occasional live stream and taking questions to help you out. So thank you guys very much. This is Alex Merced. You listen to Mastering Financial Exams on iTunes, Google Play, Stitcher, and Spotify. Make sure to leave a review on iTunes or whatever podcaster you're listening on. And thank you very much.